For over 15 years, Bitcoin was born as a revolutionary idea, and since then it has evolved from something unknown to one of the most talked about topics in the world. Today, many people have heard of Bitcoin and have some opinion about it, but unfortunately for many, it is still seen only as a nerd thing, a risky investment, or something that exists solely for financial speculation. This limited view ends up ignoring the true purpose of Bitcoin, as a response to inflation and the enormous potential of Bitcoin to be money accessible to everyone. What not everyone realizes is that Bitcoin was not created only for tech-savvy investors or big companies. It was designed to be a fairer and more transparent financial system, money that anyone, anywhere in the world can use. Bitcoin is a powerful tool to protect wealth and guarantee financial freedom. Today, more than ever, it is important to understand how Bitcoin can make a difference in your life. With inflation rising, money losing value, and people trusting banks and governments less and less, Bitcoin emerges as a reliable alternative, money that is truly yours, that no one can block, confiscate, or devalue without reason. With Bitcoin, you can become your own bank and no longer depend on intermediaries to store or control your money. Bitcoin is not just a currency and a technology. It is also an invitation to rethink our relationship with money and how we can build a new financial system that is freer, safer, and accessible to all. Most people, when they think of money, immediately imagine paper bills or the balance in their bank account. In other words, the idea of money that most people believe to be true is directly linked to something controlled by third parties, such as banks, brokers, or values created by governments through central banks. Bitcoin is different. It is digital money that does not depend on governments or banks, and you don't need to trust these institutions, which, throughout history, have failed many times. Although the idea of digital money might seem new, in reality, it is the result of centuries of research, trials, errors, and lessons learned. Throughout history, various brilliant minds, physicists, Austrian economists, computer engineers, and dissatisfied investors imagined that someday something like Bitcoin could exist. Tesla and Henry Ford foresaw the creation of money backed by energy that could promote peace. Austrian economists Friedrich Hayek and Milton Friedman pointed out the problems of leaving monetary policy in the hands of governments and how a digital currency, moving through the internet, could bring greater prosperity to people by being resistant to corruption and unstoppable. So you can see that Bitcoin, in a way, has always been present as an idea, waiting for the right time to become reality. But what these geniuses of the past didn't know was exactly how this digital money would be created or what technological advances would make it possible. The first to take steps toward Bitcoin were the cypherpunks of the past. Since the 1970s, these cryptographers had been trying to create money that could be used on the internet. However, none of those projects worked as expected. That's why it's often said that Bitcoin didn't appear out of nowhere. It was a discovery waiting to happen. Bitcoin is the result of 40 years of prior research and attempts. Several projects over time paved the way for the creation of Bitcoin, each contributing a piece of the puzzle that Satoshi Nakamoto finally assembled in 2008. For this reason, many say that Satoshi Nakamoto, the creator of Bitcoin, didn't actually invent anything, but rather discovered Bitcoin. That's because he learned from the failures and successes of these previous projects, and this knowledge was crucial for him to create something that truly worked. The first records of Bitcoin begin with an email dated October 31, 2008. On that day, a cypherpunk named Satoshi Nakamoto announced on a cryptography mailing list that he was working on a paper about a fully peer-to-peer, P2P, electronic cash system. In other words, without the need for trusted intermediaries. In that email, there was a link to the Bitcoin white paper, a document of only 9 pages that technically describes how the Bitcoin network works. The text explains how digital signatures send and receive transactions, how these transactions are grouped into blocks, and how proof of work, through the use of computational power, solves the double spending problem, while at the same time generating new coins as rewards for network participants in the process known as mining. Double spending was one of the biggest challenges in creating digital money, and many past cypherpunk projects failed precisely because they could not solve this problem without centralizing control of the network. But what exactly is double spending? Double spending is when you manage to spend the same coin twice. For example, it would be like paying the bill at a bakery with a $20 note and then having that same bill reappear in your wallet so you could spend it again. This would make the system useless as money. The word Bitcoin appears only twice in the white paper, in the title and in the link to the website, whereas the word network is mentioned 21 times. This shows how Satoshi was focused on the architecture of this P2P network and how it would function in a decentralized way, without relying on intermediaries with decision-making power over the protocol. Satoshi also made the Bitcoin white paper available on the website bitcoin.org, where it is still available today, translated into more than 40 other languages. One curiosity is that the domain bitcoin.org was registered on August 18, 2008, just a few months before the publication of the white paper, showing that Satoshi was already preparing the ground to present his creation to the world. Normally, it is possible to find out who registered and owns a domain, but Satoshi thought of everything and kept this information anonymous. Satoshi Nakamoto's choice to remain anonymous is one of the most intriguing aspects of Bitcoin's origin. The exact reasons behind this decision are unknown, but several theories have been proposed. To this day, no one knows who Satoshi is, whether it's a single person or a group of people, and in the end, that hardly matters. The fact that Bitcoin does not have a known creator is actually a positive thing, as it reduces any noise between the creator's personal life and Bitcoin itself. Satoshi's anonymity helped Bitcoin grow as a truly global, decentralized, and organic system, without the need to rely on or be tied to a central figure. Satoshi Nakamoto remained active for a few more years, working on the code and exchanging ideas with other cryptographers around Bitcoin. Then, in April 2011, Satoshi handed over control of the bitcoin.org website and the Bitcoin repository to developer Gavin Andresen. Satoshi stood on the shoulders of giants by merging previous cypherpunk projects and going further to make Bitcoin a reality. Bitcoin is the result of combining several technologies. Individually, these technologies would not have the same characteristics and properties that make Bitcoin unique. It is this union that made the creation of something so revolutionary possible. The first technology Satoshi used was timestamps. Date and timestamps that create a timeline, a time chain that cannot be altered. This timeline is essential to ensure that records cannot be changed. Many people know this timeline as the blockchain, where blocks of information are connected to each other. These blocks record transactions immutably and in the order in which they occur, ensuring the integrity and transparency of the system. Satoshi also used cryptography and cryptographic algorithms such as SHA-256 so that the network could function securely through codes and puzzles. This means that only those with the correct key, in other words, only those who know the answer to the puzzle, can move the funds. Cryptography is a fundamental technology in the Bitcoin network as a whole. Furthermore, Satoshi incorporated P2P, peer-to-peer networking concepts, where anyone can run a node and connect to the network without needing permission from anyone. This principle forms the basis of decentralization and the network architecture. Nodes connect to each other to form a distributed network for verifying and storing transaction records without depending on institutions or intermediaries. This architecture is what guarantees the system's independence and resilience. Satoshi also used proof of work, which guarantees that it's impossible to create money out of thin air. You need to prove to the network that you solved a problem, followed the consensus mechanism, and deserve to receive the coins as a reward for providing a service to the network using your computing power. Proof of work cannot be falsified, and that's what brings trust to the network. It ensures that the rules for creating each block of information were followed according to the consensus that the entire network adheres to. This mechanism is the basis of Bitcoin's integrity. Satoshi established a maximum limit of 21 million coins that can be created. This limit is reached through a mechanism called halving, in which every 4 years, on average, the issuance of new coins is halved until the last Bitcoin is created. This maximum limit is what gives Bitcoin unique monetary properties in addition to its digital characteristics. It reflects fundamental economic concepts such as scarcity, ensuring that Bitcoin cannot be arbitrarily inflated, as happens with currencies issued by governments. This characteristic makes Bitcoin a solid and predictable store of value. Finally, Satoshi also kept the entire Bitcoin project open source, meaning its code is open and public. This means that anyone can verify it, collaborate on its development, and even copy the code. This decision made Bitcoin radically transparent, something that no central bank or traditional monetary system offers. Transparency is what allows public verification and free access for anyone, anywhere in the universe. Bitcoin is the most accessible, inclusive, and open network ever created, offering equal opportunities for everyone who wants to participate. Before Satoshi, no one had combined all these technologies into a single protocol. Okay, so going back to the story of Bitcoin, 2 months after sending the email to the cypherpunk mailing list, launching the website, and making the white paper available for anyone to check, collaborate on, or even copy, Satoshi mined the first Bitcoin block. This first block, mined on January 3, 2009, is called the Genesis block. Satoshi received 50 Bitcoins as a reward, and the most curious thing is that this block contains a message, a quote left by Satoshi himself. The Times, 3rd, Jan 2009, Chancellor on brink of second bailout for banks. This is the headline on the cover of the British newspaper, The Times, on January 3, 2009. This cover here shows how the history of Bitcoin is directly linked to recent major global crises. Bitcoin emerged precisely when the 2008 crisis hit, as a response to the manipulation of the economy and the centralization carried out by central and commercial banks. The quote from the Times newspaper was not accidental. It reinforces criticism of the traditional financial system. This report pointed out that in 2009, the British Chancellor would bail out a failed bank for the second time. This gives us several clues about the reasons that led Satoshi to create Bitcoin and what he thought about the financial system. In messages written on internet forums, Satoshi demonstrated that he had a deep understanding of how the economy works and how he saw Bitcoin as a completely opposite alternative to the traditional system. He created a decentralized currency that cannot be confiscated, monopolized, or devalued by any government or bank. For all these reasons, the way Satoshi launched Bitcoin to the world was entirely fair. All Bitcoins were created following network consensus, without pre-mining. Pre-mining is when project creators issue a quantity of coins to themselves before the network starts running. This ends up creating a disproportionate privilege for the creators and founders. Furthermore, the white paper was published before the first block was mined, in a completely transparent, public, and open-source manner, giving more people the chance to collaborate or even copy the code before the Bitcoin network even started operating. Bitcoin functioned for almost a year and a half without any monetary value, literally worth zero. This allowed coins to circulate freely and the network to decentralize organically. The growth of the Bitcoin network was entirely organic because it had no initial funding, no venture capital participation, and no expectation of profit. It was a protocol maintained by cypherpunks who were figuring out how that whole stack of code could work and evolve. And unlike all the other founders of digital currency projects that emerged later, there are no records of Satoshi ever selling a single Bitcoin. He created Bitcoin and, after building the foundations of the protocol, disappeared without ever making a profit. Satoshi left Bitcoin as a legacy of inestimable value to humanity, without taking anything in return. Since then, Bitcoin, which initially had no monetary value, has hit new highs with every upward cycle. As of right now, it has $100,000, appreciated more than 7 billion% in dollars since 2010, when it began to be traded and priced by the first online platforms. The price of Bitcoin attracts attention, sparks curiosity, fascination, and greed, but in reality, it reflects the growing adoption of a new financial system. For the first time in human history, we are witnessing and documenting the birth of a completely digital currency, independent of governments and banks. The significant appreciation of Bitcoin reflects its growing demand, and thus the price tells a story. It shows the highs and lows of Bitcoin, but above all, It symbolizes the impact of this revolutionary technology over time. The history of Bitcoin is full of important events. In just 15 years, a lot has already happened, and these past events help us understand how we can better deal with what lies ahead. Well, you already know the first two milestones. In 2008, the white paper was released, and in 2009, the Bitcoin network began operating. In 2010, the first Bitcoin transaction took place, which even became a commemorative date, Bitcoin Pizza Day. On May 22, 2010, Laszlo Hanyecz paid 10,000 Bitcoin for 2 pizzas. The pizzas at the time were worth $25. Today, those 10,000 Bitcoin pizzas would be worth billions of dollars, but Laszlo's gesture was much more than a simple payment. It reinforces the importance of Bitcoin as a form of money that can be used daily and reinforces its essence as a peer-to-peer tool. Although many believe this was a mistake by Laszlo and a waste, when we look back, Pizza Day highlights the importance of the adoption and circulation of Bitcoin as money. Laszlo demonstrated that Bitcoin can be used practically without depending on banks, exchanges, or intermediaries. To own Bitcoin, you simply need to find someone willing to exchange a product or service for Bitcoin. It's the most sovereign and independent form of negotiation between two people. Another important milestone in Bitcoin's history occurred in October 2013, when the Silk Road platform was shut down. Silk Road was an online marketplace on the deep web that allowed the trading of products and services of all kinds using Thor and Bitcoin. Created by Ross Ulbricht, Silk Road aimed to be a truly free marketplace where users could anonymously trade anything based on the principles of consent and privacy. It was a bold experiment in an unrestricted market where people were free to exchange goods and services without interference from governments or corporations. Silk Road offered hundreds of products, equipment, services, and even drugs. All products and employees on the platform were paid 100% in Bitcoin. At the time, Bitcoin was worth around 50 cents on the dollar. The aim was to be like Amazon or eBay, only totally free and backed by Bitcoin. However, the platform's success caught the attention of the authorities. Silk Road was eventually closed down, and its founder, Ross Ulbricht, was arrested and sentenced to life imprisonment. This was because, although Ross had good intentions, Silk Road quickly became a marketplace for drugs and illegal products. Even though it had internal rules prohibiting the sale of these items during the operation, the U.S. government seized more than 200,000 Bitcoins from Silk Road, making it, ironically, one of the largest Bitcoin holders in the world. Ross's sentence was seen as disproportionate, unfair, and politically motivated, especially since lighter sentences were applied in similar cases. Ross's case also sparked global debate about a website owner's responsibility for their users' behavior. Although Ross's family managed to raise $1 million to pay his bail, American judges still refused to release him. Anyway, throughout time and the better understanding of authorities about Bitcoin, Ross's sentence was pardoned and he was free now. Now, another major milestone in Bitcoin's history was the release of the Lightning Network white paper, a second-layer solution for fast and cheap payments backed by the Bitcoin network. The Lightning Network started running in 2017 after the SegWit update, allowing Bitcoin to be used as a currency on a daily basis, reducing transaction costs and increasing speed without sacrificing the security and decentralization of the main network. The SegWit, Segregated Witness update, which happened in 2017, was one of the most significant changes to the protocol. This improvement has brought greater scalability, security, and flexibility to the network. SegWit reduced the weight of transactions, which lowered fees and paved the way for the development of the Lightning Network. The activation of SegWit was the result of years of debate. Despite being a significant change, it did not alter the fundamental properties of Bitcoin since it was implemented as a soft fork, guaranteeing compatibility with the protocol's previous rules. Another important milestone took place in 2020, when MicroStrategy became the first public company to adopt Bitcoin as part of its cash strategy. This decision attracted the attention of investors of all profiles, reinforcing Bitcoin as a store of value in the corporate market and boosting its recognition in the financial world. In 2021, Bitcoin underwent taproot activation, which also facilitates transactions, scalability, and reduces data usage. On that same year, El Salvador became the first country in the world to adopt Bitcoin as legal tender, showing that it is possible to migrate to the Bitcoin standard at a national level and inspiring other countries to consider this path. As early as 2023, the Nostr protocol began to gain traction inspired by the principles of Bitcoin. Nostr is geared towards social networks and online content, allowing people to take back control of their own data without relying on large technology companies known as big techs. In 2024, two major events marked the history of Bitcoin. The first was the launch of the first Bitcoin ETF in the US, which broke trading and growth records, further consolidating Bitcoin as a mainstream financial asset. The second was a historic statement by then-former US President Donald Trump, who promised to create a strategic reserve of Bitcoin, highlighting Bitcoin's global recognition as an economic and strategic tool. In just 15 years, Bitcoin has grown much faster than any company, commodity, or country. At the same time as rescuing ancient monetary properties, it has seen exponential adoption, even faster than the internet itself. This is what appears in this image. The white bars show the growth of Bitcoin, while the light gray bars stand for the adoption of the internet since the 90s. Today, Bitcoin already has the same number of users as the internet had in 1999. If the internet became the main tool for access information, Bitcoin could become the main tool for accessing value without depending on governments or banks. Even though it's growing faster than the internet, Bitcoin is still in the early stages of adoption. The adoption innovation graph is a classic model used to explain how new technologies are adopted over time by people. It divides users in 5 groups: innovators, early adopters, early majority, late majority, and laggards. The most challenging point in this model is a CHASM, stands for the critical moment when an innovation stops being something niche and become a technology that is widely accepted and used in everyday life. Many technologies don't have a cross at CHASM. In the case of Bitcoin, the CHASM stands for the transition between those who adopt Bitcoin out of ideology, curiosity, or specific interests, such as innovators and market enthusiasts, and the great mass of users who will only adopt the technology when it is perceived as safe, useful, and easy to use. Bitcoin is at this critical point at the beginning of the process of crossing the chasm. Even when we compare Bitcoin to other asset classes, it becomes clear how small it still is, and the enormous potential for growth in market capitalization, as more people adopt Bitcoin as an asset and as money. In this image, we can see how Bitcoin has only $2 trillion in market capitalization, while other asset classes such as real estate, shares, and gold have tens or hundreds of trillions of dollars. Bitcoin is a new class of asset and money, as well as a new financial system, fully decentralized and open source. If it continues on this trajectory, Bitcoin could reach or even surpass the market value of several other traditional asset classes. But the main point is that Bitcoin tends to keep appreciating because it is simply better money. To understand why Bitcoin is better money, it's important to look at the evolution of money throughout history and how it has lost some of its fundamental properties. Bitcoin has the potential to rescue these essential properties and deeply transform our relationship with money. It can revolutionize in the way we save, invest, and transact by offering an alternative that is transparent, resistant to manipulation, and accessible to all. Bitcoin solves many of the problems of the current financial system. Millions of people are suffering from inflation, negative real interest rates, confiscation, and even have their accounts closed by banks, not even knowing how Bitcoin could be a solution to protect years of accumulated work that are being drained in government money which melts like an ice cube. In the next lesson, we will explore these problems in detail, and you will understand why money, as we know it today, was literally programmed to steal value from people without them realizing it. So see you next time.